Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. My name is Henry. Today is Tuesday, November 8th, and the time is around 4 a.m. GMT. Today we are looking at the chart of oil. This is a 60 minute chart here. Very interesting here. Okay, so let's take a look. We ended this with 2. This is intermediate degree at $82. The arrow is green, which means it is bullish, right? It has a bullish sequence when the color is green. So from here we should be within the wave 3, right? With the wave 3 ended here at the top. If you want, the subdivision of the wave 3 is in the 5 waves. So we got this 1, 2 in the minor degree, 3, 4, 5, ending with 3 right here, and this with 1 in the minor degree, further subdivided into another 5 with 1, 2, 3, 4, 5. Of course, this one is a diagonal here as it overlaps, like so, right? So now we are looking for a wave 4 correction in the intermediate degree in 3 swing or 7 swing, in which we should be still within the first leg of these 3 waves here. So maybe even in the shorter cycle we can see a little bit more downside before we end, like the first leg, and then we can get a rally B and then another leg down C before we finish with 4. But then once that is finished, we expect more upside, because again the right side is green. That means this is not bearish, right? Even if we are calling another leg down, if the right side is green, we don't like the short side if that's the case, right? Now if this is wave 4 from the guideline, right, from the guideline of the Fibonacci, then we should be looking for around 23.6, 38.2% retracement usually, right? Sometimes it can be more, but usually it's around this area. And it's a guideline also. We don't want to see wave 4 to fail below 50%, because usually that's going to be too big to be wave 4, and the count might change if that's the case. Okay, so that's the idea. But so the bottom line is very simple. We like more upside. We are bullish as long as the pullback that we see stays above 82. Now that doesn't mean this has to be sort of the stop loss. You can use whatever, any other system to tighten the stop, in order to trade. But this is sort of the key level from the bullish from the bullish view. Okay, now if I zoom out a little bit, I'm gonna zoom out to the daily time frame, and I will be copying this wave 2 and wave 3 into the daily time frame, right? So here's the daily, and this is the wave 2 and this is the wave 3. Now we're looking for 4 and then 5. So that's the idea, right? Now without knowing all the labels, we can figure out a couple of things. We can fill in the blank here, which is the same as the 1 hour time frame, but also at the same time we can sort of conclude, if this is wave 2, then this has to be wave 1, and I mean that's very clear, right? And then alright, so we might not know all these labels. Now if you want to get a full idea what we think about the larger time frame, you can always check in the member area. We have 14 days trial. You can sign up for the trial if you want to see a full count in all different time frames. But a couple of things we can sort of look at here in the daily. Okay, first of all, shorter cycle. We recently, this wave 3 here, it broke above this one. So this is what we call a bullish sequence, a high. We got another high above the previous high. And if you're just simply using the extension analysis, typically when you have a sequence like this, whether this is impulsive or whether this is corrective in the sense that this could be ABC or WXY, typically in a corrective structure you're gonna be ending at the 100% extension at minimum, right? Or that's usually in the target on the upside. In an impulse, 3 can even go to as high as 1.618. Now we are calling this wave 3, but this is not like set in stone. For example, we could be even more bullish. For example, this, instead of ending 3, we could be doing a nest like this. We could be ending 1 here, and this could be a 2, and then we can go higher, 3 of 3, 4 of 3, 5 of 3. Now if that's the case, we can go back to 110 very quickly, right? Which is the 1.618 extension of the blue. But this is considered to be more conservative, in fact, by calling it this way. It is a conservative count where, like with 3 is not even 100%. Now you might say, how come with 3 is shorter than with 1? That is okay. The rule says with 3 cannot be in the shortest wave. This can be shorter than 1 as long as 5 is shorter than 3. But there is a target here. At minimum, I think we can expect around $99 in oil, which is the 100% extension. Even if you are bearish oil, let's say you are very bearish oil, right? You think it's gonna go to 0 or negative, right? And because we're already at 76, so I don't know if we can go down again. How much lower can it go, right? And that means even if it is a corrective structure, it still needs more upside most of the time, right? I mean, again, everything is all based on probability. It's never set in stone. This is not like 100% kind of thing, but probability wise, more likely than not, we should continue to extend higher, minimum 99. And in a more bullish scenario, this could be like a 1 to 1 2. It can extend even more than 99. It can go to like 110, for example, the 1.618 extension. Okay, now a couple of other things again that we can observe. We got this massive rally topping out in March. Now look at this pullback here. This is clearly 1 2 3, right? 3 swing here, 3 swing. Look at the extension. Guess what? 100%. So if you are someone who is bullish oil, then in the daily we finish a 3 swing ending in the 100% extension, which is again in a corrective structure, minimum 100%. In an impulsive structure, the third leg reached 1.618. In this case, it's a 3 swing 100%, and then starting to reverse now. Broke above this channel here, bearish channel, suggesting that maybe we are really done with this cycle. And if that's the case, then I think even if we are not yet ready to be bullish and looking for another leg up like this, then at the least we should be correcting this entire decline, and we can easily go back to 50% of this, or even more. So if you just simply measure 50%, let's say, we can go to 103, 109, right? 61.8% is 109, and again, based on this 3 swings rally, that's gonna give us $99, right? $99, which is already more than almost 50% retracement. Okay, so again, shorter cycle, looking pretty good, and looking for more upside in oil as long as it stays above 82, and the pullback should find buyers in any 3 swing or 7 swing. All right, so I'll see you all again. If you want to get regular updates on oil or any other commodities, Forex, stock indices, we do have a trial, 14-day trial. You can check out the link in the description of the video. So I'll see you all again next time. Have a nice day, everyone.